CNBC TV18, embarking on a quarter century of excellence.
You don't have Asia, which is doing too well this morning. There is a Bank of Japan policy meeting, so maybe some caution ahead of that.
But I would just like to put a support. The 40-hour exponential average is 47,379.
So the government over the weekend did reverse decision to ban use of juice for ethanol making.
Secondly, it allows mills like us and others to have flexibility and to run juice operations.
Markets have opened, so I think we need to look at what we are getting. 80 points lower.
We are seeing that now rate cuts probably will be much sharper in the US in the next calendar year.
Primarily, we are using this capital to augment our capital base and increase our branch network.
It does create a sense as to whether there's something on the cards, on the table, in terms of any merger plan that the government may have thought about.
So 60% of our inventory will be the value luxury segment.
You know, while things look absolutely flat for the market, it hides the fact that there has been a 100-point recovery from the lows of the day.
Watch out for whether SpiceJet or these other suitors, if they qualify, are able to come up with a decent bid.
For the markets, it's a quiet day after the stellar rally that we saw in the last week.
It's quiet out there, let's put it that way. 15 points lower on the Nifty. It's not a go-go, up and up kind of a market we're used to. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 Motherwell studios as all boys club today. I'm Prashant. With me, my colleagues Nigel and Mangalam. Guys, hi.
Hi. Afternoon, guys.
Afternoon. You said it's quiet out there. I wonder, which direction you're looking at. Because, Nifty, it is quiet, but broader markets, they're on fire as we speak. After being quiet last Friday or so, we did have a bunch of stocks rally. And now, as we speak, we have almost 2,000 stocks in the green for 1,200, which are there in the red. So, looking pretty good, Nigel.
Well, that's right. And we have moved in that band about 50 points for all of the trading session on the Nifty itself. But as you said, the broader markets, there's quite a bit of strength. And the Nifty Bank has taken its foot off the pedal. So I think that's one of the reasons why, in fact, the markets are still trading mildly in the red as we speak. But let's kickstart the show and let's find out what the trade should be from here on. Mitesh Thakkar joins us on the show. Hi, Mitesh. Good afternoon. Good to see you in. What do you make of today's trading session? And since the Nifty Bank was the strong part of the market in the last few sessions, will you be looking this 200-point dip as a buying opportunity?
Yeah. Good afternoon. So I think the Bank Nifty in the last few days has tried to cover for its underperformance and still looking good to me. The only thing is that the Bank Nifty also, if you look at the data starting from 23rd of November, which is about a month back, has rallied from 43,500 to 48,000. So maybe a couple of days of consolidation won't hurt here. I would want to buy into dips, but slightly bigger dips. So closer to 47,500, 47,550 is the preferred buying area. Let's see how we get there. And I still believe that we'll cross the highs of 48,220 we made on Friday and head towards 49,500, 50,000 zone. So the momentum still looks strong to me. And as I said, the buying should be on slightly bigger dips. So maybe today, if not today, then maybe tomorrow afternoon if we get that dip when the market kind of consolidates, I think that will be a good entry point. On the stock side, sorry.
Yeah, before we get to the stocks, Mitesh, I wanted to ask you on one of the stocks that you had spotted on charting trends, that was IRCTC. The stock is doing very, very well. Now, for those that gain from this sort of, a call from you, they would want to know what you do from here on. So first of all, congratulations on this solid call. And next up, tell us, what do you do from here on IRCTC?
Thank you, Nigel. I think the stock has, had given signs of a long-term uptrend starting again after about 18 odd months of consolidation. And I was looking at a first target of around 833, which was the highest monthly closing which the stock had done. I think, 828, 833, which was the highest monthly and weekly closing which the stock had done in January of 22. So I think since then the stock had not been able to clear it, and this time there was signs that now with this 18 odd months of consolidation behind us, the stock is getting into a fresh long-term uptrend, which should see it make higher highs. So I think the broad call was that if you take some extension targets on Fibonacci numbers, after 833 was cleared, which is happening today, I was looking at a target of around 1100 odd level. So I think I would still recommend a hold if somebody wants to buy, start accumulating. If you get a pullback to that 830 level, add more and keep a stop below 800. I think from a 3 to 4 month kind of perspective, I think good chance that we'll see 4 figures here. So, and disclaimer that it's a part of my portfolio, so I have vested interest. But yeah, I think, the long-term charts have again started turning up, and that should be very good news for the stock price.
And I think, Mangalam, volumes on this one today, by the end of it, should be the highest, at least in the last 2 years. I mean, November of 2021. Today's volumes, there's 1 hour to go, should be the. I don't know if volumes increase now because I think I think it's limit up, right? It's locked up 10%.
It's an F&O stock,
so
it has
so it'll move. So I think volumes, cash market volume should be the highest then, say over the last 2 years or so.
It will be very interesting to see where this goes, largely because of a couple of factors. One, everyone is playing the travel and related themes as well. The second thing where it intersects is the PSU theme itself. So those are a couple of factors which are working for them. And if you wonder that if this is the only business that they're doing, day before yesterday they did release, their note where they said that they are looking beyond rail catering itself, and they're looking to be the go-to caterer for all government-related, events in the country itself, and that should add to their business, though the mainstay of the company's business will still be, in terms of margins, the internet ticketing revenue. So let's see how that pans out. Currently, the stock doing extremely well. Mitesh, before we hear your picks as well, I wanted your thoughts on United Spirits. This morning, the stock opened lower because there was a claim made by one of their institutional clients for about 365 crores. Obviously, the company is going to contest it, but seems like the bulls have taken that dip as an opportunity to buy and sip into it. The stock is up 5% from the lows and very, very close to its fresh 52-week high.
In fact, Mangalam, while technically the 52-week high was around 1110 and today we got a high of 1109, I think the stock is giving all signs of a possible breakout because, the 1110 high was made on Thursday and Friday the stock had a big fall, which is on 10th of November and ended at 1044. So we've never had a weekly closing above 1100 for the stock. And this week it's showing signs of starting beyond that, though it's still Monday and this is the start of the week. The indicator position tells me that I think good chance that we'll see this breakout succeed this time. And therefore, I think, once this happens, the stock is showing targets of around 1160, 1170 from a trading point of view and maybe 1225 from a slightly position kind of a perspective. So this remains a buy for me. A lot of positive crossovers on the indicator charts, positive expansions on volatility indicators. So I think they should see good momentum in the coming few days. I would suggest even buying now with a stop below 1080 for targets of around 1220 if you take it about, if you give it about 3 to 4 weeks of time.
Right. Mitesh, we'll come back to you for more. Thanks very much for joining us right now with those ideas. Now, Siemens is the stock we're talking about is up sharply. The board has approved incorporation of the energy business subsidiary. Vivek is here to provide us some sort of context to this and why is the street excited. Vivek, take it away.
Well, absolutely right. On November 15th, the company had informed the exchanges about a 3-step corporate restructuring process that they were undertaking. All of this was necessitated by the fact that Siemens Energy globally was having liquidity issues. So one way in which they could go ahead and get some liquidity on their balance sheet was to sell the stake that they held in the Indian listed arm. So what the company said was that step one would be Siemens AG would be acquiring close to 18% stake in Siemens India Limited from Siemens Energy. Now, this particular step has been completed, and on December 10th, the company updated the exchanges. The second step of this particular corporate restructuring was the fact that along the lines in which globally, Siemens Limited as well as Siemens Energy are separate listed entities, even in India, they would be adhering to the same rules and they would be separating and demerging the energy business. So today there has been an update where the board has approved the incorporation of an energy biz subsidiary, and after receiving all the requisite approvals, including that of the shareholders, there will be a separate listed energy business of Siemens Energy. Now, what are the key events to watch out for? Number one, analysts expect this particular deal or this particular demerger to be completed in calendar year 2025. Can this be done? And more importantly, what will be the shareholding of the demerged entity? Once it demerges, most likely it will mirror the shareholding of the current listed entity. But going forward, how exactly will that pan out is something that, the the street would look out for more clarity from the management. And lastly, there's also a development where the company had mentioned that up to 5% of the stake could be used as a corporate guarantee. So again, that is something that we still need more clarity on.
Okay, Vivek, thanks very much for that. That's Siemens India and a pretty detailed explanation of what should follow from here. Deepak Shenoy is with us now from Capital Mind. Deepak, good to have you with us here. Thank you for your time. Just wanted to start with, actually not the secondary market, the primary market. I mean, I remember at one point you used to look at some of these IPOs, etc. As well. I mean, at least to provide some insights and what's looking good, what's looking bad, what's looking ugly. I think there's some 8 IPOs this week. Some, of course, being carried over from last week. Any good ones, exciting ones viewers should know about, should apply for?
To be fair, I haven't even looked at the IPOs. I mean, as a PMS, we can't apply for them. So to that extent, we're not, where we aren't interested. But some of these IPOs actually, tend to be, they bunch towards the end of a bull cycle where, a lot of interest comes in. We haven't seen any really big numbers yet, I think. I'm not sure about whether EBIX is this week because EBIX, I think there's been an issue in terms of the parent declaring for bankruptcy in the US. So I don't know how that impacts that particular one. I don't know that it's this week, but I do know that a lot of IPOs, even in the SME exchanges, have been seeing a lot of interest, so much so that they're greater than some of the main board IPOs itself. So I currently say that, IPOs in general, I think Samir Arora put this best, if you get allocation, you don't want it. And if it's a really popular IPO, you don't get any allocation if you want the company for whatever price it's selling it for. So we are actually more interested in what happens after it lists. Many of these companies, after they list on the IPO, they tend to dip after a month or so and then come back and recover. And by that time, you'll get a quarterly earnings release and you'll be able to analyze the company a little bit better. So we typically would buy into an IPO just a while after it lists. Even though we give up the listing gains, that's fine. I think the IPO game is more like, people are just punting on it for listing gains and for that luck that they might be able to get allocation in case an IPO is heavily oversubscribed. I don't generally recommend that. I don't think you should invest in IPO just for listing gains. But my thing is, people make money in all sorts of ways. So right now, just frenzy is happening. It's the fag end of the year. I think, just enjoy the ride.
I just hope it's not the fag end of the boom, as you put it, as you began by saying. I mean, actually, I remember I was sort of moderating a panel with Mr. Ramesh Damani as one of the panelists, and somebody in the audience towards the end sort of said, when we were taking questions, he said, well, I have a company, what's the best time and please guide me how to do an IPO. Mr. Damani said, well, do it now. Go tomorrow, file papers, do it now because this is the best time to get it. But there's also a cautionary tale in that sense, right? And kind of you made that point well. There is a bit of a frenzy happening, although there are some new and good sort of unique business models which are also coming to the market. So it's not one size fits all kind of a situation. We were talking about Siemens, Deepak. Any thoughts? Vivek was explaining what's happening there. Do you own it? Any thoughts at all?
No, we used to own it. Actually, what happened in the middle was Siemens decided to do something we thought was really bad corporate governance, where because they were trying to do this energy separation and perhaps independently create sell out the Indian division for energy, and the energy business worldwide did not want to own listed business in India at the time. The Siemens AG, the promoter itself, said we will buy out the energy business from the Indian entity. But this entity was being bought at a fraction of the market valuation of Siemens India. But this division actually provided roughly 10% of revenue and perhaps about that much of profits as well, or a little more than that. So, people were disappointed saying, why are you selling it to yourself, for something like this? And, Siemens has done this before. So, once bitten, twice shy, but I wasn't bitten the first time. So I kind of walked away from the stock at that time. What they're doing now is more interesting, where they're saying, okay, we'll do it the proper way. The proper way was how ABB did for its power grid division. They separated it into a different company called Power India. They listed this Power India company separately. Hitachi came and took over the Power India business. Now it's called Hitachi Power India. That was, after it was listed in the market, there was an open offer by Hitachi, and then eventually they took over the shares as well. Now that business, Power India itself, and we own it, it's now 5x from the time of the demerger, which was 3 years ago. So it was demerged, and when it was listed, it was 800 or 900 rupees, and now it's 5,200 rupees. I think that's the proper way to do it. What they're doing now is separating Siemens Energy into a separate business. The promoter ownership of Siemens, it's in India itself, has been rationalized to only Siemens AG owning it. When this division is split, Siemens Energy, which is a separate company, will perhaps take over this business from Siemens AG in that way. And then there will be an open offer and there will be a listing and all that stuff. I think that is the better way to do it. So we might reevaluate this company now.
All right, just hang in there, Deepak. We'll come back to you in just a bit, because you spoke about companies that you look at post IPO. One of them is Landmark Cars. Same time last year, around 28th December, the IPO came in. The stock, the issue price was close to around 500 odd rupees. Since then, it's been a big gainer, more so in just the last couple of months or so. And today as well is sitting with a solid gain of nearly high single digit. It's received an approval coming in from Mercedes-Benz India for opening a workshop at Hyderabad, and also an MG Motors showroom in Ahmedabad. Sonal joins in with more details on Landmark. Almost 10% there on that stock, Sonal.
Well, yes, two news pieces for Landmark Cars. First is where they have received an approval from Mercedes-Benz, which is the biggest client for the company, to open a workshop at Hyderabad, and this will mark company's foray into the southern market, and that's why the expansion plans are exciting the street. This will be the 10th state that they will cater to, and 21st Mercedes-Benz outlet as well, with this new workshop that has come by. The second piece of news is that they have received a new letter of intent from MG Motor India Private Limited for opening a dealership in Ahmedabad, Gujarat. And dealership will be established by their wholly owned subsidiary, which is Aeromark Cars Private Limited. This business will include both the sales and after sales of MG cars. Now remember, after sales is a high margin business for the company, around 18% EBITDA margins here, and the dealership will be operational in next quarter itself, and from Q4 we'll start seeing the impact of revenues in the books of the company. So these two things is something that has led to the 10% rally that we are seeing on the stock today.
All right, Sonal, the good part is that Prashant and Deepak, both of them don't really need to worry much, because we already have Mercedes showrooms in and repair centers in Mumbai as well as Bangalore. Prashant, does a Mercedes showroom in Hyderabad lure you to perhaps buy a Mercedes in Hyderabad too?
Go in my Toyota Innova to Hyderabad to buy a Mercedes.
You're sure he doesn't have it already?
Yeah, I don't know. I mean, I saw him drive one day and then...
Drive which one? All right, I think that's a nice attempt, guys. Anyway, we'll take I think, should we take a quick break here? Or
we'll ask Deepak where he gets his Mercedes repaired. Deepak?
That's a more appropriate question.
Yep.
Sorry, I couldn't hear the question.
No, the question was where do you get your Mercedes repaired? But the real question is, what do you think of the Landmark Cars stock?
No, it's actually surprising to me that people, I mean, Hyderabad is way richer than Bangalore, to be fair. I mean, in terms of number of people that possibly own Mercedes cars, it's surprising they didn't have one, a workshop to repair this. So I was surprised. But yeah, I mean, I think it's all good. The money in cars is in service, really. And until we get all electric, I think servicing is where the money will come from. So Landmark should, see incremental revenue. I haven't analyzed the company, so I don't know how much impact it has on the car, but it does seem to show strong price action. So definitely, I mean, when that happens, it's a signal for us to analyze the business a little more. So I'll probably come back with more details next time.
Deepak, I wanted your view on LIC. I think we've chatted about this in the past. It was totally ignored at sub 600. I'm not sure, but I think you had a bit of a positive bias out there. You could help me refresh my memory and tell me what's the view on the stock from here.
Yeah, I've been bullish on it for a while. It was my second largest position in the PMS. So I think one of the things is that LIC is a complex business, but largely a participating business. Most insurers you have are non-participating policies. You know, the money backs and all of those stuff, that the guaranteed return kind of products where typically you get a 4 or 5% IRR. Sorry. So. LIC itself is moving towards non-par, where non-par, all the profits above can be kept by shareholders. They were only about 7%, now they're about 10.5% non-par. They will earn 45,000 crores plus of profits this year, according to my calculations, and that at a valuation of roughly 400,000 crores is what it was then. Now it's about 450,000 crores. Should be a very reasonable multiple. Also, from an embedded value perspective, they're valued at like 0.8 or 0.7 times embedded value. HDFC Life is 3x. They are reasonable. I mean, of course, they're losing some. They've lost some market share in the last few months. I think they will, as they prepare their agents for more non-par, they will get better. A lot of one-timers go away. They increase their profit share from non-par from 5% last year to 7.5%, and next year it's going to be 10% from participating policies, that is, which is the bulk of their income, and that shows up in Q4. I think this way, LIC is probably going to be a 50,000 crore and among the top 8 most profitable companies in India in the next, say, in the next 2 years. And I think that's, it's a business that's worth keeping for a longer time, and I think it'll get revalued as more information starts to be available.
Okay, so the next time we speak, we will not only have your views on Landmark, but with the profits that you've made on LIC, perhaps your views on the Mercedes car as well, Deepak. Thank you for joining in and giving us your views on a whole host of sectors, stocks and ideas itself. That was a telling chart, actually, the comparison between HDFC Life as well as LIC. Before this month, we had... Before the start of this 1 month, we had HDFC Life, which was doing a lot better than LIC. But the last 1 month or so, LIC has outdone everyone else. And now that underperformance has been, that's the chart, that has been more or less taken out. Both of them up around 16-17% for this year itself. Take a short break. Come back on the other side. We have Amit Jeswani from Stallion Asset on the other side.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, the markets are more or less unmoved. Headline index is a little bit in the red. The mid caps are trading in the green. So actually unmoved from the start of the show. But let's get talking about a couple of portfolios. And we have Amit Jaiswani, the founder and CIO at Stallion Assets, who joins us on the show. Hi, Amit. Good afternoon, and thanks so much for joining in. Well, Amit, the last time you joined us, you were telling us about a couple of stocks that you all have added to the portfolio. And if I remember correctly, MCX was one stock that has done very well for you all. So tell us, what's the fresh call on some of these exchange-related stocks, these platforms? Point number one. Point number two is tech, new age tech, I think was 15% of your total portfolio. And you had a view on Paytm. In this dip, are you all adding, or are you all, Paytm is not a stock you'll hold?
Good afternoon, Nigel. Thank you so much for having me on your show. Yes, we are still riding the capital market wave. In fact, we've added one demerger in the wealth management space. So as of now, capital market remains about 15% of our portfolio. On the new tech side, see, when you get full tosses, you go for it, and the probabilities are on our side. So we go in aggressively. On the fintech company that you spoke about, we've completely exited the day the news came. So we still have about 13% on the fintech, on the new age companies, but we've exited the fintech lender that you are speaking about. See, you don't make money from payments, you make money from lending. And if that is not happening, we were playing a framework which was lost to profit. And once the framework has problems, we move ahead. We are emotionless. So what happens typically, Nigel, in a bull market, you always have out of 10, 15, 25 stocks that we own, 2-3 stocks which are in problems, which would be like 5-7% weight of your portfolio. In a bull market, you also always have other opportunities. So if we see that something not going right, our thesis are wrong, we are emotional less sellers. We wanted to sell at 9:16. We probably got an exit by 12 o'clock.
All right. So that explains your thesis there. You still have about 13% in new age businesses itself. What are the ones that you like there? Is it beauty? Is it food? Is it some platform? What is it that you prefer there?
So Mangalam, we've got Zomato, which is food, and we've got PB Fintech. Both are growing way faster than the market. Until the time there is no problem on the thesis, till the time the growth is there, we're going to hold these companies. And the day we feel that we have a better alternate, we move out. So we are emotional-less investors, I would say. But looks like Zomato should do 2,000 crores of PAT next year. That is what our thesis is. That Zomato's PAT next year will be 2,000 crores. Policy Bazaar should be PAT positive this quarter onwards, like Q3 onwards. They've already guided this on the con call. So that is the thesis. It's a framework that we use. We bet on frameworks and we make decisions based on these frameworks. And for now, we are holding both Paytm and Policy Bazaar and Zomato, and we've sold our Paytm positions completely.
Have you looked at names like Mamaearth and Delivery?
No, we don't have any exposure there. Mamaearth, the supply should be a lot next year. So we like how they are buying small brands. Like they bought Dr. Shade for 5 crores. Today, revenues are in 3 years, 150 crores. They bought one more brand, Aqua. My apologies, I'm not good with beauty, so I don't remember the name. But there, the ARR is 350 crores in no time. So they're hyperscalers. They're scaling up well, but we don't have any positions. And valuations are also not super cheap. So, but you're getting such good full tosses that everything is relative in our business. We look at alpha opportunities, and Mamaearth doesn't fit the basket yet, but we're tracking their execution aggressively. Delivery, the growth rates don't fit our criteria. See, the reason why you buy these tech companies or you pay very high valuations is because of 40%, 50% growth. And if you don't find that kind of growth rate, then you would be better off being with traditional players. And delivery growth rates have been very poor at 9-10%. So we're not interested in delivery for now. Unless it starts growing at 30-40%, we will start looking at it.
Got that. Amit, hi, good afternoon. You said emotionless twice, and I was wondering, Can we replace that word with cold-blooded sellers? You think that's that doesn't go well?
Amit, actually, it's a season to be jolly, and everyone's talking about positive vibes, and suddenly Amit comes on the channel, and the last 5 minutes is talking about being emotionalness. All of us were like, oh, what's going on?
See, what happens, Nigel, is that you focus too much on the 5%. Of your losers, you'll focus 95% of your times, and you focus very less on your winners. In a bull market, be very impatient with your losers. Like, at least we have learned the lesson a hard way. I tell my investors that if I make a mistake, I will not tell you that I've made a mistake. I'll tell you that I've corrected my mistake, got out of it, and moved on in life. It's okay to make mistakes. We are in the business of making decisions. Buying is a decision, selling is a decision, doing nothing is also a decision. And when you make such decisions, you'll make mistakes and you move ahead, no problem.
Absolutely. And you know, what you're saying is during very strong bull markets, the tendency to make mistakes also goes up, right? Because valuations are very high. That is one part of it. And of course, it looks like the next guy is making so much money, the urge to do something is very strong. And that's where emotion also comes in. Do you see that at play in a lot of pockets, Amit?
Absolutely. In fact, we are also FOMO'd so many times. This market FOMOs you because there is always someone who's performing better than you. You do start thinking that should I go more B2G? Like we have zero exposure towards B2G. Just imagine our position. So life is tough, but we're up 60% this year, so it's okay. Nothing bad, nothing to complain. But the FOMO is there. The moves which are happening in markets are very, very aggressive. And now there were two known unknowns. See, there are two kinds of risks which typically happen. One is unknown. Something like COVID was an unknown. And there were two known unknowns. One was election and one was the Fed. I believe the markets have moved ahead. And I was just speaking to someone and I was telling them that, by March, the markets will price in whatever 5 years of Modi gain is expected. So markets are hyper discounting. There is everyone has the same information thanks to people like you and social media. And the discounting, the returns that we think we'll make in 3-4 years are getting made in like 9 months, 12 months. So it's unbelievable, the market. But you have to keep churning. You have to keep finding newer ideas because markets. If example, there used to be a time, I'll give you an example, Prashant, that there used to be a time that page industry would grow at 30% every year and you would get like 40% returns, some returns from earnings and some PE would go higher every year. But now what market does, if market has conviction that this company will grow at 30% for next 5 years, markets will price the 5 years growth in first year itself. So if you don't sell out and find one more 30% grower, then you will be stuck with that stock because then there is no upside left in that stock.
So then let's cut to the chase.
Just one thing, Amit. When you said that you are very super quick to sell, right? If something doesn't work out, do you mean is there a function of the price not behaving as you wanted to? Because one is a little more jumpy if one is buying now fresh, something new. At maybe fairly high valuations, and if it goes against you, then you don't want to hang around to find out. Is that or are you talking more fundamental thesis? Something has changed, that kind of thing.
So Prashant, in Paytm's case, Paytm was doing about 16.5 crores of lending a quarter, and analysts were pricing in that this will move higher because they were growing at 100% year over year. So it was expected the next 2-3 years, they will move towards 1.5-2 lakh crores of lending. And on 2 lakh crores of lending, you make 4% is your take rate. That means you make 8,000 crores. You've gone from 16,000 crores a quarter of lending, and now you're looking at 8,000 crores a quarter. So there's a degrowth. Which will happen in less than 50,000 crore, less than 50,000 rupee loans. And you don't want to, because like I'll give you an example. We were getting Nuama at 20p that time, 18p, 20p, FY24, whereas Anand Rathi was at 54p, 361 was at 35p, and this one was growing at 30%. It was a demerger. We already have the 12th man in the team always. So if any players of my team get injured, we quickly remove him from the team and find another player which we think can do better.
So
What's the current 12th man looking like? Let's cut to the chase. You said it's very difficult to find ideas in a market like this where everything is being discounted, etc. You have to work hard. So we'll allow you to do the work for our viewers. What is it that you're looking at right now?
So we've got a block in a very small company. I don't think I should name all these players. My team doesn't get very happy with me naming them. Of course, we're a SEBI-registered. We have a entity. None of this is recommendations. These are just what we are doing in our portfolio. So do not even try following us. We exit with great speed, as you already know. So we've got this structural steel tube pipes company called JTL Industries. We're buying today also, but we bought in large quantities on the block. So that company is doing ROCs of 35%. We've sold our APL Apollos to get into this. So APL Apollo did a 10x for us, and we've sold our APL Apollo and converted some of them to JTL Industries. We did it at a block at 196, and we purchased some today as well. We expect decent numbers for the company for next 3-4 quarters.
Interesting. Moving out of APL Apollo and moving into JTL, it has valuation support, but let's see what they do. And they have a fundraising plan as well later today. So let's see what comes out of that. Well, Amit, thanks so much for joining in. Good speaking to you and filling us in with, the way you're moving your portfolio. And, when Amit spoke about the 12th man, Mangalam, what came to my mind? Virat running in. Remember with the drinks. With the drinks. So anyway, thanks.
It's not very often. It has to be a bear market for your 12th man to be Virat Kohli.
But that video
is hilarious.
It's still playing in my mind. But let's keep that for later. For the time being, let's move on. I think we have Nimesh who's joining in right now to tell us about what he's picking up in terms of D-Street chatter. Nimesh, you go first.
Hi, Nigel. So after a big move last week, some bit of consolidation is clearly visible. But the interesting feedback is today the institutions are better sellers. In fact, there's going to be a large basket selling in the mid-cap name. So that probably, it's not showing up in the screen, but clearly from a flow perspective, there is selling pressure, especially in the mid-cap basket from the large institutions. That's the overall thing. In terms of sectors which are doing good today, the PSU, of course, is been continuously doing good. That stands out, but the pharma index has done well today. The index is at 1%. A lot of individual gainers as well within the pharma names. And on the other side, some bit of profit booking is visible in the real estate stocks after the big move last week. So day of consolidation, so to speak, but from a flow perspective, unlike the screen, there is selling pressure and largely in the mid-cap space.
All right, and individual stocks, Nimesh, what's on your radar today?
Well, Mangalam, in terms of individual names, the first are a couple of stocks where there were large block deals. So the first one is Archem Chemicals. There is a large block, nearly 3.5% equity got changed hands. I'm not too sure on the buyers and sellers, but that stock is relatively under pressure after a large block. The second was Sapphire Foods. Even in Sapphire, there was a large block, nearly 6% equity got changed hands. Looks like the private equity was a seller in today's block, and a couple of mutual funds and FIs were buyers. So multiple buyers on the buy side, but seller was largely a P in Sapphire Foods. Second is Manappuram Finance. That stock is buzzing off late. Even in today's the stock is up 100%, but there is a big chatter going around of a large corporate development. But from a flow perspective, there are sell flows, and in fact, there are MOC sell flows at a leading FIs. So when the stock is up, there is selling pressure from the larger FIs in Manappuram Finance today. The third name is JK Tyre. Big move in that stock in today's trade, up 10%. I understand the company is likely to raise funds by QIP very soon. So watch out for the QIP book in a day or two in JK Tyres. And the last one is Indiabull Housing Finance. Big move the day the stock is come out of the FNO ban. That stock is up 5% and big volumes as well. For the last few days in the delivery, there was some bit of HNI action back in Indiabull Housing. So big move on back of HNI flows, as well as the fact that the stock is out of FNO ban.
There was, Indiabull Housing is coming after a break. It had a very large move earlier, and at that point as well, there were some very large investors who'd gotten in. Then, I think a large majority got out, and now I think there is interest back again. 232 on Indiabull's Housing, so it's a cycle high for this one. Nimesh, SJVN is the other one. You spoke about this in the morning. I think there's a downgrade. Stocks under pressure.
Oh yes, Prashant. So, it was part of my standard brokerage for the day. A very unusual sell call from Goldman Sachs. In fact, it's a double sell, so to speak, from buy to sell, and they have a target for 65, which is way below the current market price. Now, the note very clearly says that the stock has run up sharply, almost 110% since their initiation in July 23. And now they believe that from a valuation perspective, the risk reward is not favorable. In fact, the stock is now trading way above that bull case scenario, which is around 90 rupees per share. And at current price, it captures largely all the RE run-up, which can come in the near future, as well as full materialization of all the opportunities which are there for the company. So that way, it's fully priced in. Additionally, Goldman believes that the street is not yet factoring in the delay in the commissioning of the two large plants, which is Boxer and Arun 3, which will potentially have an impact on the earnings, and there could be further downgrades going forward. So that's been the key reason they have downgraded the stock today. Valuation discomfort, as well as the fact that there could be earnings downgrade. While they expect that the Renewable Energy Implementation Agency, which is the business which they're focusing on, that can add between 3 to 10% of the current market cap, but this will drag the balance sheet going forward. So on back of valuation concerns, the fact the stock is rallied pretty hard, a double downgrade on SJVN technically. So Goldman has today downgraded the stock to sell now, and they have a target price of 65.
Okay, Nimish, thanks very much for that. We'll take a quick commercial break here. The market's down about 30 points, and the index, at least, it's a quiet day. We'll come back, buy and sell short-term trading ideas with our technical experts coming up on the other side.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. The Nifty is holding around the 21,400 mark, virtually unmoved, but the Nifty Bank has taken a bit of a bigger slip, if you must. Will be an interesting one to watch out for over the next couple of days. Tomorrow is the financial services expiry. Thereafter is the Nifty Bank expiry itself. Shipping stocks are doing well. They are at the high point of trade for Shipping Corporation of India, and some traction seen in Angel One as well. Been a big mover, has now moved to the high point of trade. Good time to get in the tomorrow trade. Mitesh Thakkar back with us again. Mitesh, what are you looking to buy today or sell today for a reverse trade tomorrow?
Good afternoon. I have buy calls despite the fact that both the indices are in red. The stocks are, showing good momentum and making new highs. So Asian Paints is a BTST with a stop at about 33.10 for targets of 33.65. And Voltas is the other one which is on my radar. That's a BTST with a stop at 863 for targets of 880.
Okay. All right. Thanks a lot for that, Mitesh. Well, let's move on and let's get you an exclusive then. Sources tell CNBC-TV18 that SEBI has given the NSE a set of conditions it needs to fulfill before filing for an IPO. Yash is with us to fill us in with more details. Yash?
Well, Nigel, NSE IPO is something which at least 8 out of 10 investors on the street would be waiting for. And there's a big development which has happened as far as that particular IPO from NSE is concerned. What we've picked up from our sources is that market regulator SEBI has sort of laid down certain preconditions before the National Stock Exchange. And these conditions are to be satisfied before the SEBI by NSE. Before the exchange files for its papers as far as the IPO is concerned. As far as these conditions are concerned, the first and the most important one is with respect to the technology infrastructure. Market regulator SEBI has told National Stock Exchange that it has to strengthen its technology infrastructure, satisfy the regulator before that condition can be fulfilled. The second one is to go glitch-free as far as the trading is concerned. For about a year, NSE has worked towards it extensively. Set up a disaster recovery site, conducted mock trading through that particular site. So that is another condition. The third one is with respect to improving the corporate governance structure as far as National Stock Exchange is concerned. And largely, these are the three conditions. And the fourth one being clear all the legal matters as far as NSE and the co-location matter is concerned. These are the four major conditions which SEBI has put before NSE. Do remember that, of course, NSE has been in constant touch with the regulator as far as these four conditions are concerned. SEBI is yet to come back to the National Stock Exchange with respect to what it thinks of the preparations that the exchange has done. But if you look at the investors list in NSE, the top 10 would come up on your screen. This includes LIC holding about 10.7%, Aranda Investments, Stock Holding Corporation of India, SBI Capital Markets, State Bank of India, Crown Capital, so on and so forth. And from here, it'll be very interesting to see how does SEBI read into all the preparations which the National Stock Exchange has done. As per the last auction, NSE was valued at about 1.56 lakh crore rupees. So, of course, it's a richly valued company. And with the run-up that has come in BSE, the other exchange, of course, that would have some sort of rub-off effect as far as valuations for NSE is also concerned.
All right, Yash, thanks very much for that. We'll take a quick commercial break here. We'll come back. We'll have Gurmeet Chadha of Complete Circle Consultants with us on the other side to take some more questions, running into market closing.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Well, the markets have moved a little bit lower. Now we're 50 points lower. Nothing really to worry about. But I think a couple of stocks have moved lower. If you're looking at Tech Mahindra, the intraday chart should come up for you on the screen. Tata Consumer as well has slipped a little bit. And I think Hero MotoCorp as well, that's had a big run in the last few days. That as well has slipped a little bit. So some of these stocks should come up for you on the screen. And the Nifty Bank that was down close to around 200 points at the start of the show, it's now down close to around 300 points. So that's why, in fact, we are seeing some bit of selling out there. Gurmeet Chadda joins us on the show from Complete Circle. Hi, Gurmeet. Good afternoon. Thanks so much for joining in. Well, Gurmeet, I wanted your view on a couple of these names then. The real estate pack, that one's off color throughout the day, whether you have DLF, Godrej Properties. These stocks have come in for some profit taking. Last few days have been good for them. And cement as well is seeing some selling. How are you all playing both these two themes?
Hi, Nigel. I think you're right. It's just that the sharp run-up would have seen some profit taking. You probably will see that in some IT names as well. But I think the broad trend of the bookings being strong remains good. So, and I've got to be a little selective here because you've got to play real estate geography-wise. So I think DLF is still guiding for about 20,000 crores of pre-sales, with a combination of mid-affluent and luxury segment. The rental portfolio continues to do well. The office occupancy has been around 88%. And there is credible balance sheet improvement. The debt levels are almost negligible now. So the impact of RERA now would probably be seen in more consolidation. We also like Brigade South, again, very healthy pipeline of launches, some bit of margin expansion, good mix. That's something we like. But obviously, as I've always said that the bigger play obviously is in the pipes and cables and wires, tiles, home improvement, etc. I think that's where probably more structural. Real estate will be, the moves will be sharper both ways. But I think overall, I think it's more of a, especially on private side, I think it's a housing-led capex cycle which is beginning to unfold.
All right, housing-led capex cycle. As we speak, Zomato has moved higher. Zomato has moved to the high point of trade. A couple of other notable movers, Varun Beverages is one of them, has moved to a fresh record high on that counter. It's around 1,140 odd rupees. Gurmeet, any of these names that you like? Varun Beverages, in fact, has also surpassed a lot of the notable consumer names in terms of market cap. I can think of Britannia, there is, Dabur, Marico, even Pidilite, something like that. It's crossed all of them in market cap.
I think it's a spectacular run for Varun Beverages. I think about 15, 16 times since IPO, if I recollect correctly. And I think the valuations are, it trades at about 60 times now. But with Coke entering into alcoholic beverages, you will see probably Pepsi following suit. Also, they made some big announcements just now, to which the stock is reacting. And I think the focus to move into more energy drinks, fruit-based drink, and not being only dependent on soda and cola-based, I think is a strong pivot, and they will enter newer categories. So I think when you enter things like Varun Beverage or Tata Consumer or some of the names, the call you have to take is, can the profits multiply faster against the normal FMCG growth of high single digits? So let's say Varun Beverages make 2,000 crore profit. Can it add another 2,000 crores in 3-4 years? If the answer is yes, probably, so I think I like Tata Consumer and Varun Beverages because in general I like this food and energy segment more, because the potential for growth is much more than the beauty and personal care segment or the hair care segment and some of the other segments. But valuations are rich, so I'll be happy if I get a 5-10% correction in these counters to gradually build position. But these are boring businesses, long-term businesses. A SIP route is better in my view rather than taking a huge lump sum call at these valuations.
If you've gone down to a store nearby and seen those, magenta bottles of Sting, you would realize that it's anything but boring. Have you guys ever tried that energy drink, Sting?
No, I'm not. Apparently, it's
an over 3,000 crore business. Currently, the fastest growing beverage in the country.
So it falls into what? What are the sort of competing drink?
The competing drink would be charged. So basically, what happened is the energy drink market in India or in the world earlier was dominated by one large player, which was Red Bull, which was a 70-75 rupee category. These guys democratized the category by bringing it down to 20 rupees. And now, as a result of which, it's been the third consecutive year of them being the fastest growing product in the country. Have you tried Sting?
No, I stick to the malt. But anyways, great. All right, Gurmeet, thanks for that. We're going to have a chat with you later on as well in the next few minutes or so. But let's start winding down the markets then. Today, in fact, was a bit of an off day or a day of consolidation. Power Grid, ICICI Bank, ITC. When ICICI Bank and ITC, both of them go home with cuts of around 1.5%. That's what puts some pressure on the markets. Also, Infosys, that's the other I in the category. You know, that one as well was a little bit under the weather. What did well? From the two-wheelers, Bajaj Auto came out there and revved the engine, so that was up close to around 3%. Hindalco went on with home with some good gains, and Reliance Industries silently that was holding one end up with a gain of close to 100%. So pretty good going on that one. But plenty of action, guys, in the broader markets. Mangalam, go for it.
In the broader markets, Nigel, we had more stocks advancing than declining, and that is a positive. That is something that portfolios will be feeling happy today. You spoke about a bunch of eyes from the frontline index which were losing. Let's talk about one of the eyes in the broader markets which made up for all those losses. It was IRCTC, a big mover, up around 11% to take home in terms of gains. And then we had, a couple of other notable movers as well. Siemens was up 6% after Vivek's, news break on that counter. Zydus Life was up around 5% as well. And we continue to see some bidding in a couple of these select metal names. So Nalco and Hindustan Copper were the ones that moved higher. From the broader markets itself, we saw some cuts in, the real estate pack. So we had Godrej Properties, which ended lower. Union Bank was a notable loser with a cut of almost 4%. Some of the PSU banks saw some profit taking as well, with names like Canara Bank as well ending at the low point of trade. Prashant.
Well, I think it's been a quiet day, but I think it's a little bit of pullback accelerating towards the end on the Nifty. So we end with about a 50-odd point cut. But it'll be interesting to see, for example, what the cash market figures, etc., are, because last almost 10 trading sessions now, we've had humongous flows. I mean, actually, it's about $3.5 billion, including all blocks and everything else. But some $3.5 billion of foreign money has been put to work in the last two trading weeks now. So will we see a bit of consolidation now? Remember, after that state election rally, which was worth about 4% or so non-stop, the market did go into a bit of a consolidation. But then last week, Wednesday, we had the big news from Fed, and the rally restarted again. So 2 weeks non-stop. Now maybe, let's see, into the year, perhaps some consolidation. 21,410 is where we're at. It's a wrap on this edition of Closing Bell from all of us here. It's goodbye, but markets forward will take up all the action going forward.
CNBC-TV18, embarking on a quarter century of excellence.